Well, hello there, Maverick Traders. This is Rob Reinhold. I'm joined by Mr. Ankit Sharma, and here we are already in the second week of July. So let's go over exactly what happened last week, and that's going to be the first thing that we do. We're going to look back at the previous week. We're going to see what news affected the market. We're going to take a look at what happened in the markets and what happened in the currency markets. Then, of course, we're going to focus on what's happening this week. We're going to take a look at our scoring system, and we're going to go through all the currencies and individually score them and take a look at the news next week. And then, of course, we're going to boil that all down into what setups are we looking for, what are the entry points, what are our targets. So let's go ahead and get into it. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application. Then you'll watch the full-length recruiting video and then schedule an interview with one of our traders. Are you our next trader? Last week, we had some very small pullbacks in equities, and it really just happened the first couple of days of the week. And then really by the end of the week, we really closed mostly flat, at least on the S&P. We also saw lots of movement and breakouts in the yields and the dollar. And we're going to be taking a look at both of these, really focusing on the yields in the US and really show how it's not really correlating anymore with the movement in the dollar. We also heard from the Reserve Bank of Australia, and they kept rates where they were, and they said that they believe that peak inflation has already passed. And last week, we had the big move up in Bitcoin Cash and Litecoin, and they pulled back. And we talked about that last week. We said, look, these things are going to pull back. They've gone up way too much, just exactly what was expected. If we take a look at the calendar, I want to focus in on just a few of the reports here. We started the week off with some weakness out of the CPI in Switzerland and also the US PMI. So again, the markets pull back a little bit. And then all of a sudden on Thursday, take a look at this US ADP report. Double the jobs, more than double the jobs that were predicted is what they reported. It was amazing. And the stock market actually didn't like this number. It didn't like it because if it's too strong, it means the Fed's going to raise rates more aggressively. So the market actually pulled back on Thursday. And then Friday morning, we got both the Canadian and the US employment report. And I'm just scratching my head at this. We were meeting live trading this event. And when the numbers came out that it missed estimates at 209,000, how is that possible? How can the ADP report say twice as many jobs, 500,000 jobs are created, and then the government number say, no, it actually missed and was less than expected? Really bonkers kind of news here. I have no explanation of what happened, but we did see the dollar sell off on that news. So economically, last week, it was a week that shows that this economy in the US and really around the world is stronger than central banks have thought, which is why we're starting to see, again, interest rate expectations start to move higher. So let's see what that actually did in the markets. All right, let's look at all the numbers here. So last week, again, slight down week. As you can see, S&P down just slightly. VT, the world index, down just slightly. The crypto basket, look, this was all Bitcoin, Cash, and Litecoin. No surprise, we called it. Bitcoin had been up like over 100% over the last 2 weeks. Just a small pullback in the grand scheme of things. Gold pretty flat, and oil actually had a nice little bounce to end the week. We take a look at these charts. Take a look at these candles here. So again, we've had this nice uptrend. We poked our head out of resistance a little bit here, and then pulled back to a 20-day moving average, and look at this candle. This is a nice bullish candle telling you, hey, we are about to head higher. Now, the question is this a bull pullback where we're going to see the markets break out to a new swing high? Or is this more of an ascending triangle where we may have to pull back one more time before we break out to the upside. Either one, it's bullish. So the only question is timing. Does it happen early next week or does it happen late next week where we get the breakout to the upside? As far as the currencies go, not a whole lot of movement. Now, again, there were a few little stories here or there, but take a look at most of the currencies. I mean, look at dollar, franc, euro, Aussie. They didn't really do much. And this move in the dollar was all on Friday. It was all on Friday. The dollar is pretty much flat all week long. We did see the yen actually take a nice bounce off the bottom. We talked about how the yen was a weak currency and you wanted to play it weak, but you wanted to also wait for bounces. So we've had a nice bounce in the yen. We'll take a look at the yen to see if that bounce is over to become short in yen again. But as you can see, yen was the outperformer this week, and the CAD was the underperformer. And this comes on the back of a better than expected jobs report out of Canada on Friday, and the Canadian dollar just rolled over. And for me, the Canadian dollar was the one currency that really changed its trend and its trajectory this week. And we're going to be focusing on that one here when we break it down. Coming over to crypto, as you can see, Bitcoin, Ethereum flat, just like they've been the last couple of weeks. And all the movement has been in the other coins around it. So let's jump into the market as it stands right here, right now, and take a look at the numbers. This is a bullish market. Plain and simple, this is a bullish market. We have a +3. The S&P is above a 20, above a 50-day moving average, and the slope of both of those is rising. That is as bullish as you can get in our scoring system. Let's take a look at the movements outside of equities, just so we can get a little bit understanding of what's going on. This here is a U.S. 10-year government bond, and it is breaking higher. And you can see we are reaching that resistance that we hit back in March. We're all the way back up to 4.1% on the 10-year. And the question is, can equities continue to go higher? Now remember, Friday, the equities continue to go higher with higher interest rates. Thursday, they didn't. Ankit, what is your call here on the 10-year? Do you think we do break out above this? And do you think the stock market can handle that if it goes any higher?
That's a good point because, looking at last year, this was a very good sort of a sign that if you see the yields going up, it had an impact on the markets pretty shortly right after. That's not the case anymore. So I don't think I want to bet on that correlation. As far as what we look at with the yields, I think we probably continue going higher, especially like the month of July. We are expecting the Fed to raise rates, and then right now is about a 95% chance for a rate hike. So I think that's likely to keep the yields sort of elevated, and we'll see after that where the yields go. But I think the shorter term pressure is to the upside for the yields. But as far as the market goes, there's a disconnection there. So I think we just want to continue looking at the markets to the upside, regardless of this sort of a sign here, because we are not seeing 101 come together. So these are the points where we just need to leave that correlation on its own and just follow the yields and follow what the equity is doing. And at the same time, look at the US dollar. Last year, when the yields were rising, the dollar did follow. That's not the case anymore. So I think this year is a bit of a shift where we need to get away from that sort of correlation that we were so relying on last year, which is no longer the case.
Well, I was just about to ask you what your thoughts were of these yields spiking this week and the dollar falling. I mean, what do you think about that?
I mean, so I have one little possible explanation on that. So one of the things that is different from last year to now is that last year we were seeing the rate hikes, but then the expectation for further rate hikes were pretty elevated. This time around, July meeting, there's a 95% chance for a rate hike. But as you go into September, later on this year, we are not seeing anything above the rate hike that we're about to see. So this is again telling me that once we get the rate hike, right now the markets don't have sort of expectation for further rate hikes after this one. So I think that could be a reason where there's just not a whole lot of follow through or correlation. And I think that's something we need to kind of keep an eye on is, does the future expectation changes beyond this meeting? Right now we are not seeing that, But as soon as we do see that, I think that will be the time to make that pivot.
I think that's as good as explanation as any. Let's take a look at the crypto basket. Huge run last week, and we said just expect a pullback. And I even said we could pull all the way back to this level, and it would still be a bullish market in cryptos. So the question is, are we going to get the bounce here? We'll have to wait and see for next week. We may pull back a little bit further. But cryptos to me just look like they're taking a little pause from the recent run that it's had. On the calendar, we do have quite a bit next week. First thing I want to talk about is the RBNZ. So we have the RBNZ on Tuesday, and the expectations are that they will not raise rates. Now, the RBNZ was one of the first central banks to raise rates, and they've also followed with the RBA that they've seemed to back off that lately. The big question is there going to be kind of like we saw in the US, where the Fed took a pause and then they said, hey, we need to start hiking again? The market doesn't think the Aussie and the Kiwi are going to do that. But if they do come out of surprise, I think you need to be watching for that Kiwi. Then on Wednesday, we have big report in the morning. We have the CPI report out of the US. I don't think this one will be as big of a deal as we've seen over the past couple of months because the Fed has pretty much told the market what they wanted to hear, and the market is saying, okay, this is what we're going to get. The market already expects there to be more rate hikes, and it seems like the market has gotten okay with that. So let's say this CPI comes out as expected or a little hotter. It doesn't really change what the market is expecting. The market is expecting more rate hikes to come, and it's decided it doesn't care because the economy is a lot stronger than they expected. I don't see a hot CPI really causing a huge issue for the market. Anka, do you think I'm wrong on that?
No, I mean, right now, I think it's all about the perception. And everybody's looking beyond, what's expected in the second half of the year. So I don't think these numbers are likely to have a big impact, especially this month. I mean, we are still going to see a big drop-off of those big spikes that we had last year. So going to this meeting, I'm not at all concerned about the spike in the inflation number. I think following July, going to August and September, I think that's when I will start to focus a little bit more because then we get to see a drop-off of these big numbers from last summer. So I think going to this meeting, we're pretty much steering clear, not expecting a big movement off of it.
Yeah, it sounds like we're in agreement. We both think this is a less important CPI than we've seen in the past. Right after that, we've got the Bank of Canada. Now, this is a very well telegraphed rate hike. They're supposed to raise rates by 0.25%. The CAD actually broke down this week. We'll take a look at the chart. The question is the Bank of Canada going to back off? We'll have to wait and see. That is Wednesday at 10 a.m. And then really for the rest of the week, really nothing all that important that we think is going to dramatically move markets. So to wrap up this week, equities, we think they are bullish and they stay bullish. We hear from the RBNZ and Bank of Canada this week. So if you're trading either of those currencies, you need to be aware that they have big reports on those days. And then the biggest economic report is we're going to look at that CPI report. It's probably the biggest one, even though we don't think it's as important as it has been in the past. So let's jump into each currency, look at it on a chart, and give it a score to where we know exactly where we're going to be hunting this week for trades. Let's start off with the cryptos. And the cryptos became bullish really just a couple weeks ago. Once we started to break higher here, we moved up. This is Bitcoin, and you can see the Bitcoin has been putting in a very, very long base here. We're high basing. Every time we come down to the bottom of the range, we can get a nice little bounce, but it hits up against resistance. Now look, high bases, we don't know how long they're going to last, but eventually, most of the time, they break out higher. One of the things I like to do, I do like to take positions at the low of the base. And then if it comes up here and runs up against resistance, I'll go ahead and sell and take some profits. But every so often, it will break out and run, and you were just in a fantastic cost basis on this trade. Right here, right now, it's only a +1. Let's see if there's any better looking crypto here. Bitcoin to me looks Okay. Come over here to Bitcoin Cash. This one has just been bonkers. Big move out of nowhere. 200% move. Look at this pullback. I know it's in a percentage term, you say, oh my gosh, this thing has pulled back, 10, 15, 20%. Yeah, but it ran 200. And you can see that there are still some buyers out there. Look, I'm not going to be playing in this space. The great thing about trading is you get to decide what vehicle you race in. And I always give an example of car racing. Cars are the same. You drive cars the same, but some cars are inherently faster. So if you want to have less chance of a wreck, just get in a car that doesn't go over 100 miles an hour. You can play a slower car. There are cars out there, F1 racing cars, that if you make any little mistake, you pay dearly for it. And that's what volatility is. And so when you're playing around with a crypto that's gone up 200% and then it pulls back 30%, understand you're in the F1 race car. Any little mistake you make is going to be amplified. Here's a great thing about trading. You don't have to get in that car. There's other cars you can drive. So I don't play around with stuff like this. My younger self probably would have dabbled in it and played around with it, but my older self, not anymore. There's a saying in the market. There's old traders and there's bold traders, but there are no old, bold traders. So what happens is you learn your lessons. You say, hey, you know what? I'm going to go in a race car that is more my speed that I'm accustomed to. So I'm just going to skip out on that one. All right, here's Ethereum. And I've got to say, Ethereum was the one I was watching, waiting for a breakout, ready to go. And it actually was pretty lousy this week. So it's pulled back. I am no longer really excited about Ethereum. I was waiting for a breakout this week, and it just never came. Just never came. So I'm going to put Ethereum back on the shelf and say, I need you to get stronger for me. Which leads us to the last one, Litecoin. All right, Litecoin broke out, had this one big day, and then gave it all back over 7 or 8 days. Look, this isn't the kind of price action that really makes a good bullish case. A good bullish case is it's gone up for 7 days and it pulled back for 1 or 2. This is kind of the opposite here. So I actually don't like this price action either. Even though we are back to a support point, I just don't love it. So when it comes right down to it, I look through all the cryptos that I'm looking to trade, just the 4, and I got to say that Bitcoin is my favorite of the group, and it's not even all that much my favorite. Let's go into the Forex markets and see if we can find something that looks better. If not, Bitcoin may be our focus for the week. Here's the chart of the dollar. And you can see here, the dollar it could have bounced. It had every reason to bounce this week. Everything said the dollar should go higher, and it broke. When we were trading the payrolls report live, I said, look, the dollar should have ran yesterday, and it did for a second, but then it gave it all back. And I said, that's telling me the dollar doesn't want to go up, even with good news. And you can see on Friday, it actually turned back down. Ultimately, the dollar is right at the moving averages. The moving averages have flattened out. This is a 0. On the downside, okay, it's got a little bit of a downside right now, but for me, this dollar is neutral. Neutral at best. If you want to trade it in a range bound manner, you can. That's not my game, so I'm going to go look somewhere else. Here is the yen. Now, we've been talking about the yen short for a while here, and we said, hey, anytime you get little bounces, those are selling points. Anytime you get bases, those are great selling points. Bounces, selling points, again, bases. Okay, as you can see here, we're having a pretty significant bounce here. And we're back up to the 20-period moving average. We could go all the way back up to this point here without really violating any technicals. So the big question is this the bottom of the yen? Not like the ultimate bottom, but the bottom of this downtrend it's had for the last couple months? Or is this just a great shorting opportunity? My opinion, it's a great shorting opportunity because I think equities are still going substantially higher. But, Ankit, I want to hear what you have to say about that call on yen. Is this a shortable rally?
I mean, that's a very good question, and I think right now, yes, we have seen this sort of play out last year as well, where we were so extended to one way, and we did get this bounce. And again, right now it's all about the timeline, how long this little bounce or rally will last. I think a great example would be looking at last year, where we can see this run into maybe another week or so before turning over. So the question is that can we short this right away, or does it have more room to run? So we are right at the 20-day moving average. If we can get above it, I think the next level of resistance at about 50. I do see it sort of drifting higher a little bit before I can jump on that short, but I think I just want to be careful about jumping the short here, but letting this little play out. And then what we really want to get in is on sort of a failure where it just runs up and it just gives up. I think that will be a sign for us to kind of jump on it. But if you take a look at the price action right now, both the velocity and the trending score are sitting at the highs. So what is it telling me? That there's still upward move to come. So that's what I really want to be careful about. Yes, in the longer term, I think we are still in this little larger downtrend with a bit of a short-term pop. Now, question is that shorter term, it could carry a little bit longer. So I have to evaluate that going to next week. But I think this is a good time to be a little bit careful because, if we have been so used to shorting on every little pop here, this time we just have to watch out if this goes a little bit higher because all the other times we stayed below that 20-day moving average. This is the first time that we are testing it, and if we can get above it, then I can just be on the sideline and maybe perhaps look at something else.
Yeah, being short in a +3 on velocity score is not a good idea. You're exactly right. You have to wait for this thing to fail at a certain level and then show you some weakness before you can jump in short. So ultimately, the yen is off the table for a short until it breaks. But I definitely like the bounce we're seeing, and I'm definitely going to be watching it. Up next to the Swiss franc. Swiss franc is ultimately going sideways, building a base. Is it going to break out higher? Maybe, probably. When? It doesn't look like it's in a hurry. So for me, the Swiss franc is interesting, but I don't want to play it. I have no desire to play this kind of price action. This is a very frustrating price action. There's no money to be made here. There's money to be made here. There's money to be made here on the downside, but up in here, just not interested. I need to wait for something else to happen. The euro to me is the most interesting trade for the week. The euro ultimately has been going sideways, but we've been trading between highs and lows. We came up here, hit it here, came down here, hit lows here, hit lows here. And we've got this little middle part here where it seems like this is a little inflection point as well. We just came up and hit the high. The euro was very strong in the month of June, and then we've pulled back to this level. We got a really nice candle on Thursday. The problem is there really was no follow through on Friday. The euro is a currency I'm interested in. Definitely going into this week saying, if I can get a green candle on Sunday, Monday, I'm willing to play it up to the top of its range again, and it's possible that it could break through this time. But I need to see that candle on on Sunday, Monday, to really say, okay, the euro is looking to run back up to that high. Ultimately, it's sideways, so we'll see what happens, but I'm mildly bullish on euro. Here is the big question of the week. Is this the pound breakout? Is this it? Did that happen on Thursday? We had been building this really long, massive base, and we broke out on Thursday, and we held above on Friday. So the question is this the breakout? Is this what we've been waiting for? Because we've been talking about until it breaks out of this range, we can't do anything with it. It's out of this range. The problem is the price action on Friday is maybe it's not out of the range. It doesn't really want to run yet. I really like pound here, but I want to hear your take, Ankit, on is this the breakout?
That's a very good question. And just before the class, this is the chart that I was looking at because, again, we've been going back and forth. I mean, we are in line with our direction, but I think what we have been different is where I've been more hesitant to buy because we are up against a very strong resistance. So I was looking at the chart And looking at the historical chart going back 5, 6 years, it seems like we are breaking out. But is this a true breakout? I think as we hold on to the gains here, the prospect looks still bullish because we are not rejecting that level, which is different than last multiple times that we have reached that level and we immediately sort of rejected it. So this is a sort of a grudgingly slow pace long that I would rather like to see a more sort of a firework when you go against this strong resistance. At the same time, I think this is a trade to kind of play it sort of a mildly bullish, even though the direction and the resistance is pretty strong. I think we could be getting out of that range. So as long as we stay above it, I think we probably just creep higher. Again, that's been the story for the pound. If you look at the entire year, starting with the January with the pullback, since then, since the mid-January and February, we've been just going up and up and up and up. So maybe, it's just following that theme. And if it stays on that course, I won't be surprised that it just continue moving higher and we are out of this, very strong resistance. And I think at that point, the pound definitely looks much better, especially when you compare it to euro or even Swiss franc. The pound is definitely more superior.
Yeah, I've got pound as my number one currency trade for the week. I'll definitely be looking at that. And let's come over here to CAD because I want to just go back to where we were last week on CAD. CAD had just made a new swing high. And I said, hey, you know what? We probably just need to cool off here. I really want to see a base. And that's what we were seeing. I really want to see a base. And I want to see a breakout at the top of that base, and then I'm back in. And you can see that this broke down pretty badly here. So CAD was on my list. I liked both pound and CAD, and I liked CAD better than pound. And the CAD completely blew up on me this week. And at this point, I have to downgrade it. CAD is no longer on my list of currencies I'm looking to be long. It's now sitting right between moving averages. At this point, I'm not really looking at CAD trading at all. Ankit, did this move in the CAD surprise you this week?
Absolutely, especially going into next week. I mean, I wouldn't be surprised if this would have happened next week after the rate hike, and then usually we see sort of a run-up into a news event, and we see a sort of a die down after that. This time, this definitely surprised me because the expectation is still there. The expectation hasn't changed at all. So the question is that move baked in, or is this a sort of a dip opportunity? But I must say that for a shorter period of time, the dollar and the CAD did deviate from each other, meaning that the dollar continues to stay weak, but then the CAD continues to stay strong. And we saw that the sort of a dollar CAD pairing sort of, went to some sort of extreme. But now I'm seeing it kind of getting back in the normal here. So I think this is a bit of a tough one because it was looking good. And now it seems like it's kind of back with that, with the US dollar as well. So no winter next week, I am more neutral on this than I was bullish on this. But I think after the rate hike, we'll have to see where the CAD goes. But yeah, this one definitely goes down on the list here as a 0 for me.
Let's take a look at the Aussie here. The Aussie last week was really a no touch for me. And you can see, we're having movement. It's going up and down. But at this moment here, we're in this very tight range. If it breaks out below that, we've got a little bit more downside. If it breaks out above, maybe more upside. But look, Aussie, not interesting to me. Now look, you can absolutely look at this thing relatively strong and weak off of levels, but there's no trend going on here. And we take a look at the Kiwi, and the Kiwi was strong this week. And we've got RBNZ next week. I think if we can get through the RBNZ and we can hold on to these recent gains, I think the Kiwi actually has a chance to become one of the stronger currencies. I'm making no decision on that until after the RBNZ. If we can hold this level and possibly break out of these little highs here, I think we can have a nice little run. So Kiwi, possibly end of the week story, but early in the week, not so much. So I've got to say, when we take a look at the markets, right here, right now, the trend, the only thing is looking that's trending strong is Bitcoin Cash, which I already decided I'm not going to play, and the pound. Everything else is kind of sitting in the middle, not doing a whole lot. If we take a look at where's the price action right here, right now, We've got a whole lot going sideways. We've got dollar, CAD, Litecoin, the weakest at the moment. And we've got the yen, the strongest at the moment. And I'm not ready to play long yen yet. So I got to say, I'm going into this week not with anything ready to go at the first of the week. I'm going to let the market develop. I'm going to let the market show me what it's going to do. And again, specifically, I want that pound to hold those gains. Then I can take a look at making some possible trades. So for this week, for me, really, the pound is the only thing that makes any sense, but I don't really know what to trade it against. So let's take a look at just one or two pound crosser for me, and then I'll turn it over to Ankit.
Are you a better trader with more capital? Having more capital in trading can provide certain advantages, such as increased opportunities for diversification. With more capital, traders can potentially take larger positions and potentially generate higher profits if successful trades are made. More capital can provide a buffer against market fluctuations and potential losses, allowing for a more resilient trading strategy. Other factors like market knowledge, trading strategy, risk management, and emotional discipline are equally important. Proper risk management is vital when trading with more capital to mitigate potential losses and protect the invested funds. Discipline and consistency are key elements of successful trading. Go to Maverick Currencies YouTube channel and go to the About section and then click on the desired trader position to watch our intro video.
My preferable trade would be pound yen. This is what I want to trade. I want to trade pound yen because, again, I think pound is going to continue to be strong, and I think yen is going to turn over. But as you can see here on a daily chart, we're just reaching a level. We've had a big run, so I can't expect it to keep running here. If I take a look at a 4-hour chart, we've just really flattened out. So again, I can't really justify this trade on pound yen because the yen is strong at the moment. The pound is strong, but so is the yen. So for me, I just don't have anything I love. Could I take a look at pound CAD? Okay, that's a currency pair that's possible. We've just made a big run, and we're having this sloping base that's just strengthening. The question is, where is the entry on this? And I can't give you a great answer. So I'm looking out there, trying to see if I can find something to pair the pound up against that I like, and I just don't like anything. So this is from me. I'm starting the week off with, I'm sitting back. I'm waiting for something to show me I like the pound long, but where is the weakness? Is it going to come from the Aussie? Is it going to come from the CAD? Is it going to come from the European currencies? I'm waiting to see because right now we're not seeing where the weakness is. Ankit, what do you want to take a look at?
Hey, Rob, I'm in the same boat as you. I mean, there are movements happening, but if you really look at the charts, some of the charts are very messy looking. Aussie, Kiwi, I mean, they're not moving the way the pound has been moving. So this is, again, an environment where things can happen on a day-to-day basis. And I think what I'm more interested in just jumping on where the velocity is, because that's really where the movements are. I want to take a look at chart dollar yen, because this is the interesting sort of a turnaround that we're getting in this dollar yen cross here. So you can see the yen is moving. Now, dollar yen has had a remarkable run. So the question is, how much of this move is supposed to come? Like, how big or deeper pullback this could be? If you look at the $140 is the important level of support. So there's definitely some interesting level on a lot of these yen crosses that we can continue seeing playing out. I mean, I really like the fact that the velocity, everything is sitting up at the high of this candle, which is, again, telling me there could be a further continuation of the move. So I think next week, this is what I'll be looking at. CAD yen, Rob, if you want to pull that up, that's another one on my list. And again, look at the daily chart on the CAD yen. We stalled exactly at the resistance that we did last year. So this is, again, a very important level of resistance, and we're rejecting that. The question is, how much more can we drop on this one? And again, I can see that any sort of a bounce, this is the thing that I'll be looking for, is that does these bounces that come in, do they fail? Because on the uptrend, every little pullback was bought out. And if we want to see that this has more downside risk, then every little pop will then be sold. And that's what I'm looking at. And I think there's some opportunity in the shorter term. That's where the velocity is. So I'm really focused on velocity. As far as the trend score goes, again, I'm not really getting a big help. So I think this is a time to know what's moving, what kind of news event is likely to move it, and just focus on that. Next week we have lots of data. That's the one that I'll be focusing on, trading off the data rather than just jumping on a trigger on a daily chart, because velocity can move on a day-to-day basis. So Rob, that's my outlook here.
And Ankit, I really like those yen trades if we do get a pullback in equities. The yen is really prime for a nice little pop off the bottom short term. But for me, the strong equity markets is keeping me from really jumping on that shorter term bounce in the yen. But again, dollar yen look great. Look absolutely fantastic. Let's wrap this up. These markets are likely to remain bullish. There's really no reason for them to go down. They refuse to go down, and the price action all tells us they're going higher. There are not any real great trades, at least in my opinion, or Ankit's at the first part of the week. And the problem is we don't really know where the weakness is right now in the currencies market. We just don't know where the weakness is. The only weak currency we had is ripping higher right now. So we really don't have a good weak currency to pair things against. That will change. Just keep watching, keep analyzing, and when you see your chance, that's when you jump on it. Everyone have a great weekend. Goodbye, everybody.